Hey, Bulls and Bears, welcome. It is Thursday, November 18th, 2022. Let's get right into it with the housing market. Now, with home prices that are still high, they've come down for the past, 4 months now in a row, month over month. Um, Overall, we're still higher than what we were last year. There are some cities that are down year over year, but prices have come down over now 4 months consecutively here in 2022. But the combination of home prices that are still high, even though they've come down somewhat, and these high mortgage rates, and actually mortgage rates came down a bit too. They dropped a 0.5% down to about 6.8 the last time I checked. Buyers now need a six-figure income to afford a typical home. This is out of CNBC. So affordability has gotten worse, even though home prices have seen a bit of a correction. In October, U.S. buyers need to earn $107,000 to afford the median monthly mortgage payment for a typical home, which is roughly about $2,800 on that mortgage payment. That's 46% higher than the $73,000 yearly income needed to cover the median mortgage payments 12 months ago. So look where we are today. It's even more unaffordable if you have to finance a home. Of course, cash buyers are going to be the ones in the best position now as home prices correct. Hopefully, you'll be able to have a big enough down payment or enough cash to buy a home outright if mortgage rates stay high and if home prices don't come down harder and faster. Because I said here, this is going to be a slow motion correction in the housing market. I've stuck to that for a long time, over a year. I've said that at least every week, and we've been proven correct once again. There's not a housing crash. If there was a housing crash, you would see affordability and monthly payments coming down to where people could actually afford them. But that's not happening currently. Next, let's talk about another CNBC article. Household debt soars at the fastest pace in 15 years as credit card usage surges. All right, we've talked about the credit card debt numerous times, but just another report. This one talks about overall household debt in all areas, and it's not going to stop, right? You think this fight against inflation is going to actually work? You think they're going to be able to tame inflation with higher interest rates? Well, even in the areas where there's price corrections, for those that don't have cash to buy it, it's going to be even harder. If you have to finance a car, it's going to be harder with a higher interest rate, even though car prices have also come down somewhat. So it's going to be a wild time. Now, speaking of inflation, here's something I wasn't happy to hear about, but I kind of expected it here. This is Lynn Alden, and here's what she says. Quote, price inflation that is only from supply chain bottlenecks will go back to pre-bottleneck levels after the issue is resolved. Of course, the supply chain issues, everybody here probably knows about that. When the health crisis came out, etc. Price inflation that is in significant part from the monetary expansion stays at a new higher level indefinitely, right? So basically, she's out here predicting permanently high inflation. Lynn is out here predicting basically permanently high inflation. Now, we have the Fed out there saying that they're going to get back to their 2% inflation target, which is absolutely nonsense and insane, because what does that mean? That means that the prices that are too high right now are going to go even higher. They're just going to go higher at a slower pace. Instead of 7 or 8% like we saw in the CPI print, it's going to be 2% if they actually succeed. I don't think they're going to succeed. I think it's going to be more than 2%. But just the fact that they have a 2% inflation target, right? We don't need inflation. We need falling prices. We need deflation. The entire operation, the entire agenda behind this is just it's failing the people, right? The people are just going to get worse and worse and worse off, and they're going to be buried under more debt. They're going to be more desperate, and that's what it's going to be. Speaking of inflation, Axios Thanksgiving meal prices are going to be at a record high this year. 14-ounce bag of stuffing mix up 69%. 2 frozen pie crusts up 26%. Half pint of whipping cream up 26%. A half a pound of peas, that's a lot for a family there, 23%. A dozen dinner rolls, 22%. 30-ounce can of pumpkin pie mix up 18%. Haha. I bought a bunch of pumpkin pie mix when I found it on sale like 9 months ago. Cheaper. Let's see what else here. Turkey shortage. The U.S. Secretary of Agriculture said in a call with reporters early November that finding a 20-pound turkey in some regions could be challenging because of this illness outbreak amongst the population of birds. They had to basically cull more than 1 million. Let's just put it that way. Not good, not good. All right, let's transition a little bit to the layoff situation. FedEx, layoffs before the holiday season. This is not a good sign. We also know that Amazon is laying off. Several tech companies are laying off. Layoffs are on the uptick, that's for sure. Question out of here. This is Mish Talk, by the way. Question, when was the last time that FedEx furloughed workers in the middle of peak season? Yes, this is the peak shipping season. Holiday shopping is upon us, and FedEx is laying off. That should be another warning sign that things are not as good as some people may want you to believe. Back to the housing market. U.S. existing home sales are crashing at the fastest pace since the fall of Lehman Brothers. That's basically the event that preceded or kicked off the financial crisis, the failure of Lehman Brothers. Now we're seeing home sales crash at the same level. The unaffordability is really pushing people to the sidelines. Here's something, though, about home buyers. All cash sales accounted for 26% of transactions in October. That's up from 22% in September. What did I tell you? I said that cash heavy, the cash money talks, the cash carriers are going to be the ones scooping up a lot of the homes, and we're seeing the increase. Now, 26% of these homes sold in October were cash buyers. So who's taking the biggest advantage right now of these lower, slightly lower home prices? It's not the people that have to get loans or get a mortgage. It is the big money people waiting on the sidelines with cash. 26%. Over 1 in 4 homes sold to someone with cash. So the rich continue to get richer, even with lower home prices. Imagine that. I think we warned you about that here, didn't we? All right, it's all coming true, folks, and things are going to get a lot crazier. Thanks for watching this update. Please like, subscribe if you like these updates. Really appreciate you help this channel out. Hope to see you here next time on this channel. JJ here, Bull Boom Bear Bust. I'm out. Have a good weekend. Bye now, Pete.